What is going on, guys? Welcome back to the channel. In today's video, I'm going to be going over the trades we end up taking on Friday, as well as the game plan going into this week. So this is what we ended up looking like on Friday. I kind of went over a little bit in yesterday's video about the breakdown of how I trade every day, but I'm just going to go over it again and show you guys the trades we end up taking. So 30-minute here was crossed off of open here at 9:30. We were crossed Thursday and Friday, which means the market's bearish. This is on the 675 puts. It was a Friday, so we end up picking new contracts for the following week out because the current ones we were using would have been 0DT. If you guys have been trading the system, you guys know that on Fridays we always pick the following Friday's expiration. So yeah, going into Friday we were bearish, and yeah, our pretty much plan was to look for short trades, and I actually took 3 trades, stopped out on 2, and ended up hitting on 1 of them for a winner. So I'm gonna go over those. So what I did first was take a short at 10.07, and I'm pretty sure this was a fib level here right off of let's see, 10.07. Let's see, 10.07. So yeah, I ended up shorting this 78.6 level right up in here. Wasn't the best setup in the world just because we didn't get much of a bounce off of above to the next fib. This probably would have been the better short here at 61.8, which it did give a solid drop right there. We ended up hitting that fib and bouncing right to the next fib. That was definitely probably the better short, but I didn't end up taking that one. So yeah, I ended up taking this short here off of this fib, and this was a half size trade because again, this was my favorite setup in the world. On setups that I don't have complete conviction in, I go half size. It's probably better to sit out of those, but I mean, it's still a valid trade in my opinion. We have we end up breaking below this fib here. If you look here off of open, the first 30-minute candle ended up closing below that fib, and we went at least 10 points below it. So that's why I did end up taking this retest of it, which didn't really give much of a rejection. I mean, initially, even if you bought this initial retest up in here, you would have been stopped out pretty much right off the bat. So yeah, I went short at 10.07, ended up getting stopped out pretty quickly. And yeah, I really wasn't risking. I think I risked like 10 points on ES, which wasn't much, and it was half size. So that was the first loss I ended up taking. If we pulled the 0DT chart, this probably ended up lining up with some sort of 50 at 10.07. Yeah, it did. So it ended up lining up with the 0DT 50 as well. So I'm like, okay, market's bearish. We're at a fib level. We're at a fib level. Might as well take a stab at this on half size, and then if we get back above this 10 SMA, that's where I'm going to add more for like a full size position. And yeah, that just didn't end up happening. We ended up rejecting that 10 SMA and ended up crossing negative. That was the first trade we ended up taking on Friday. Next trade was another short at 11.47. Pretty sure this was the test of this other fib once again. Of course, I didn't play this initial one. I ended up coming back up in here, and I took this rejection at yeah, 11.47, which was right here at the top of this fib, and I ended up getting stopped out on that. And yeah, those were the 2 losers that we ended up taking. It was pretty much the same like thesis right here. I mean, we came up to another fib. I'm still bearish on the day, and we also, I think we're at the 0DT 50 call side. So there was another confluence there at 11.47. Yeah, we were right up in this 50 SMA on the 0DT side. So I'm like, okay, solid setup here. Gonna take a short. This one I sized a little bit more on. End up stopping out. I only risked 30 points on NQ, so it wasn't the biggest stop in the world. I kept it pretty tight. So yeah, I ended up stopping out for 30 points. My TPs on this would have been like close to like over 100 points. So risk to reward on that trade was through the roof, like a 1 to 3, 1 to 4. So that was worth taking. Of course, we ended up stopping out on that. But it's all about how you mitigate the risk on these trades. I mean, I went pretty light on the initial trade, kept my stop pretty tight on the next one, and then we ended up taking a short one more time, and this was a good one. So I ended up taking options on this one just because it's just easier to hold. And if we look here, and I was also looking to swing this into this week. If we look here, pretty simple chart. I mean, you guys could already guess what I ended up taking. All I did was buy this dip at the 50 SMA. Once price came down to 50, I grabbed puts for 220. Grabbed the 680 puts, not too far out of the money, because I don't want the weekend data to like destroy the contracts if we don't really open red, or we just kind of open flat. So those went in the money by close on Friday, and those are up like 60%. I trimmed half, and my stop is break even from here. Or I'm just going to trail this 50 SMA here on the 30-minute, but most likely go and break even from here. No point in trying to give that back. But yeah, it was a simple trade. I mean, the risk to reward on this trade is also through the roof. I mean, we get a closure below. Okay, maybe stop out for like 20%. 30% max, which I mean, I doubt it'd be down 30%, but yeah, max I was down was I think like 15% at one point, because I didn't get the best fill in the world, so unfortunately, I had a little bit of drawdown on that by like 15%, I think. Actually, maybe it was like closer to 10%, but yeah, we bought the dip and we saw a nice dump off of there. Now we're at a pretty key spot. Again, if we look in the higher time frames, we are back up at this pretty much 4-hour 50 up in here. This is such a pivotal spot on these charts, and if we come back up to it tomorrow off open, I would expect it to get a further drop above this 50, just because it's kind of like the same thing that happened over here. I mean, we hit it once, twice, third time close above, fourth time we end up dumping a bit more, and then end up rejecting off of this daily 50. So we didn't hit that daily 50 yet, so it could still come up and hit it. So my guess is if we do, see a move either like drop right off of open or we open red, that we're gonna see that move to that daily 50. It would just make sense. So that's kind of my thought process on what could happen from here. Or if we open green tomorrow, this just immediately dumps and we lose a 30-minute 50 and we go back neutral. So those are kind of your two scenarios going into tomorrow. I know it's kind of like up or down, but you pretty much just have to play what you see. And I played what I saw on Friday, and I'm just holding runners. And going into tomorrow, market is still bearish, so I'm still going to be looking for my trades to the downside. If we get 0 DT cross on puts, I'll be looking for that. Or if we get some sort of pullback to this 50 SMA down in here, on the 30-minute, and that lines up with some sort of fib level, that'll probably be a good short to take. If anything, it'll probably end up being the 61.8 level. If we open, nice and green tomorrow, then if we open above that 68.81, maybe we do cross negative and go neutral. So really all depends on how we open up. It's kind of usually how it goes when we're trending. You gotta see how we open and then go from there. Can't really give you a fib trade if we still have overnight action. So it's either going to be a 68.81 reject, or break back below 78.6, take a retest of it, or if we just keep, end up ripping and we cross negative on the 30-minute, maybe we get a 0 DT call cross that we could end up taking. So those are pretty much all your trade opportunities for tomorrow. Again, when it comes to the fibs, I'm going to explain this once again. I went over in yesterday's video, but I'll do it again. When it comes to changing these levels now, the thing you want to look for is, one, the 30-minute chart has to cross negative. So if that 30-minute chart crosses negative, okay, note that you don't change the levels yet. So wherever we are when we cross negative on the 30-minute, you have to look for a break of the range that we're currently in. So there's going to be two fib levels that we're between. Not this 50% mark doesn't count. That's why it's in green. It's kind of just for like TPs. But ignore that 50% mark when it comes to taking fib trades. So if we do open nice and green tomorrow and we cross negative, most likely we'll probably be between the 68.81, 69.30. So if we do cross negative when we are in between these two levels, okay, what do you look for? You look for a break of 69.30. If we end up breaking above 69.30, which means a closure above that level on the 30-minute, and we go at least 10 points above that level. If that happens, then we end up changing the fibs. So you flip this 100% and the 0%, so just flip them, and that 100% is going to be at this same high, and then the 0% is going to be at this new swing low, because this was the last swing low we had in the bearish trend before we cross negative. That's how you get the levels. I'll go over it every single video when there's a scenario where we might get that change, and that's how you do it. It's very simple. We cross negative, you don't change them yet, you wait for the break of the range. If we break lower now, if we break back below 68.81, then you keep the levels how they are, because the only way you change them is if we break out to the upside. If we break back down and we remain bearish, why would we change levels? Because we're still going to have this lower pivot. This pivot isn't going to change yet. So that's how you go about getting the levels, and that's the plan for tomorrow. And yeah, that's what we did on Friday. If you guys enjoyed, drop a sub. If you guys want to learn, join Discord down below. And yeah, I'm out. Peace.